We're going to get into business credit. Now, let me sum today's training up with a story of mine. Back in, the time when I was trying to build up a real estate empire, and how I was doing it was with information that I thought was the right way to do it. And how I did it is I was always taught, well, when you're taking a mortgage out and you're using credit, go for the cheapest rate. So that always landed me to borrowing in my personal name. Now, when I was borrowing in my personal name, everything was great until the day that it wasn't. I had 36 units. I went for my 37th unit and the bank said no. They said, Mr. Naugle, you don't fit in the little square box called debt to income ratio. And I said, yeah, but you've been lending to me on all these deals. They said, we can't lend you anymore. Then a lot of things happened. They froze my line of credit and I was done. It spun me into a world I wasn't ready for. I thought I was on my way going straight to the moon. And all of a sudden I was faced with a problem. And that problem was I can't get access to capital. And I couldn't get access to capital because I followed the traditional knowledge, which was borrow in your personal name, go after the lowest rate. And what I've learned from that point forward is you should always be using commercial credit. You should build your commercial credit and use the strategies that we're going to go over today. So folks, sit back in your seat, get ready, because this is the information that nobody's taught you. This is the information you're going to need to scale that business to where you want it to be so that you can collect those mailbox checks every single month and go out there and live your perfect day. Everybody, Wealth Webinar Wednesday, back at it. And we've got a great host today, or a great speaker today, more or less, Marshall Davis. So let me just give you a little take on Marshall. Marshall is NCH's, so Nevada Corporate Headquarters, business credit manager. He leads the credit team. And prior to him joining NCH, he was the business credit coach. So being a business credit coach, he's got to know a thing or two about teaching people how this business credit thing works. Marshall, I don't know where you were back in 2009 to 2014 when I was off on my way doing this. You could have really helped me a lot. So with that, Marshall, tell everybody just a bit more about yourself, and then let's dive right into this and teach some people some things that they need to know.
Thank you, Chris, for the extraordinary invitation. Most importantly, credit gets me excited on every plane. But more importantly, that story relates so much to a lot of the business owners that I speak to today. So today what I want to do is I want to give you guys a brief example or a small taste of what the intimate details are to give you a high consistency to be able to go out and access capital for your business, void of your personal information, and more so, really understand the basics of how it works. And once you have an understanding to it now, from there you can massage it into your business models, really give yourself a real advantage to having longevity, but more importantly, having the capital necessary to have a successful business. Okay? So with that, I'm going to share a PowerPoint with you guys here for a second, and I'll go over some of the details.
And again, folks, just remember, this is, going forward while he's loading this PowerPoint up, just remember that story that I told you, and the Will Rogers quote about, the problem not being what people don't know. A lot of people don't know what you're going to learn today, but they think they know the right way to go forward because of the misinformation that they've been given their whole lives. And you hear us talk about this all the time on these trainings. And that is, the biggest thing we sometimes need is right under our nose, but it's not what we've been taught our whole life. When it comes to money, we're not taught to be in control of our money. And in this case, we're taught to always chase that cheapest rate. That cheapest rate puts our personal credit in the way. And sometimes you eventually will fall flat on your face the same way I did, because you just can't scale to the levels that you need to. And unfortunately, the second thing that happens when you're buying stuff in your personal name is there's a lot of liability. I'm not even going to go into that, but that's a huge issue that you guys got to be careful of. So Marshall, you got that PowerPoint ready to rock?
Yeah, we are ready to roll here. So I do want to speak on that last piece, the liabilities piece, right? And you're absolutely correct. A lot of business owners, especially some of your newer businesses, all have the pretense that if I go to my bank and they offer me a business credit card and I'm approved, that I now have business credit. And the unfortunate part in that is that you are now forever attached to that debt. And the trick to it is to remove that liability and allow your business to stand on its own to Build a credit profile that will actually give you just as much as you can secure with personal credit on the business side, but more importantly, remove yourself completely from the equation, right? And that's the real power of business credit. So what types of business credit are there? There's a few that most of you probably are already accustomed to, one being transactional capital, and another one being growth and operational capital. Now, what are the differences and how does that look from a lender standpoint? So transactional funding, hard money, private money, and banks, right? Most of you guys are familiar with these, banks being one of the toughest to get through, especially with everything that's taking course with the economy. So you want to make sure that you understand what the changes are now based on what has happened with the economy, and what are those changes, how do they impact accessing funds?
Every time I was borrowing in my personal name, that went against my personal credit score. Every check, everything hit my credit score. And then when I went to the commercial side, none of those mortgages, I had 91 properties, and not one of those properties showed up on my personal credit report, which is a really important thing. So I just want to make sure we cover that, because that was like, when I saw that and the bank told me, hey, none of these show up on your personal report, I'm like, are you kidding me?
Right. And I'm definitely going to cover that information here shortly. So in that, again, on the other side, growth and operational capital, this is probably where most business owners focus their attention initially, right? These are technically, accounts that are going to give you access to help with day-to-day operational costs, that gap funding, that in-between funds if you need. And this is, primarily driven by either personal credit. Then you have your business credit cards that are like your Amex, your Visa, your Lowe's, your MasterCard, things to that effect, that if you do them properly, exactly as it's communicated, you separate yourself. And you can still access these very same accounts. We just have to take a strategic approach as to how you go about doing so. Now, the unfortunate part of it is that most businesses, they don't make it out of the first year, and those that make it to the second year, that number is staggeringly low, right? Then you move that to a 5-year plan, and it gets even worse for the most part. And in most cases, a lot of individuals are sacrificing personal savings, retirement funds. They're using funds that they plan to be successful with. And unfortunately, by not understanding the real factors of when it comes to business lending, they meet their demise, unfortunately. So what are those factors? One being just education, really understanding the intimate details of credit as a whole, and then more importantly, business credit and how it relates to successful businesses. Next up being access to capital, probably one of the most important of overall, right? In most cases, when you start a business, you are tapping into those savings. You are tapping into those retirement funds. So that means that it's going to be a little deficient when I need to go out and purchase large, properties or large purchases for the business, equipment, things to that effect. So you want to make sure that you always have access to capital no matter what the setting. Now, of course, to build business credit, you have to have an entity. And with that, there is a way that you can actually build a business credit profile as a sole proprietor. But unfortunately, it's a sole proprietorship, so therefore it still relies on the business owner, which technically means that you remove all of the extra, it still comes down to a personal loan, right? So in that, the trick is to move away from that. Build a system that's going to give you multiple resources that you can tap into, so that as you have challenges or higher needs for your business, you now have multiple vehicles to access cash, all right? Now, why do you need business credit? Most new business owners find out really quickly how costly managing a business can be. You have your administrative costs, you have all other costs that come about, and in most cases, most of them are known, but there's a lot of hidden costs that may come. And in that, this is where business credit can help fill the void on some of those additional costs. Also, just as he explained, when you start using personal credit to secure business financing, it's going to be rated based on how much you can afford, that debt to income that he was mentioning earlier. And once you've hit the ceiling on debt to income, essentially everybody's going to close their doors. And what will that do for your business if you're trying to grow a model with success? The other piece being, it limits income. I can't produce if I don't have access to capital. I need more capital so I can generate more projects, more deals, whatever that equates to for your particular business. Again, it's going to come down to having multiple resources. Then, If you are relying on your personal credit to fund your business, that also limits personal things that you can do, right? I'm in the market for new vehicles for my family. I need new homes. Well, now that I'm using my personal credit to support my business, it's going to increase my debt to income ratio. It may potentially increase the amount of inquiries. It may also increase the amount of applications that I may put in on any given scale, all which have a significant impact on being able to get an approval for good, healthy balances, if you would. And the other side of it is that when you cut these options, once you've maxed out all of those credit options available to you, now you have to deal in cash, right? And then that, we're living in a digital age. A lot of companies now, lenders and creditors, they're all reliant on data sets and measures to really measure how well you perform with credit. So the minute that you don't have that access, it starts to have an impact there as well. And then, of course, all of these factored in, contributes to potential failure for your business. All right? All right, next up. SBA. So within the last year and a half or so, we've seen a lot of SBA funds being thrown around, right? And one of the primary things is that in this particular arena, real estate investors, they are not qualified for SBA lending based on the risk factors that it comes with. Now, there's those that have gone out and used different titles or labels as far as the industry that they operate in, but ultimately, when it's all said and done, they are able to really identify what type of industry you actually work with based on some of those external components you may have as your business, part of your business. Brokers are one of them that are high triggers for most banks, but ultimately, even to get an SBA loan, it is required that you have a Dun & Bradstreet report, which most don't know. So all of these factors all contribute to one thing. How do I find my way to capital without damaging my personal credit and maximizing whatever opportunities that are there, right? Well, there's one way, and that is business credit. Now, there's a lot of business credit myths that are out there. When you speak to business credit as a whole, most will go straight to Dun & Bradstreet. Most are aware of who Dun & Bradstreet is. They are the largest and biggest and longest standing credit bureau for business reporting. But, with everything that's changed in credit over the years and how credit is managed for business, you have Business Experian, that's also a very prominent part of building credit. You also have Business Equifax. And those are primarily the three top business credit bureaus that are reporting that lenders, creditors, and underwriters are using as a proof source when they're mitigating risk for a business credit line. But in that same note, these are bureaus that are catering more so towards the bureaus. Their loyalty lies with the bureaus. Their job is to maintain the integrity of the information that's being delivered so that the lenders and the creditors have a clear view of who they're lending to, good, bad, or indifferent. However, that may put you in positions where you may have overextended your credit, maybe had some credit lapses in the past that can have a potential impact. So all of these things are real reasons as to why I don't want anyone in my personal credit. I don't want anyone seeing anything that I've done there. If this is business, I want it all based on my business. But how do you build good business credit when the biggest challenge in that arena is, one, it's not regulated like personal credit. So you could potentially be using accounts that you assume are building a strong profile for you that may never hit your credit report, i.e. banks. Just as an example, Chase has a few credit lines that actually will report directly to a business credit profile, but it also reports to your personal as well. So it kind of negates having a business credit card with them, if you would. The other ones being, say, Wells Fargo, Bank of America. Not a single card that'll report to a business credit profile. And if you're under the understanding that I've been approved for a business credit line by Wells Fargo, that it's helping me, well, it's still attached to you personally, so it's still causing a little damages, and it's still going to put limitations around how far you can go with your business.
So Marshall, real quick, I don't mean to cut you off, but that was a good point. I mean, I've got a couple credit cards that are, business cards. They have the business name on it, but I think they're all in my personal name as well. So those don't report to Dun & Bradstreet?
Unfortunately, no.
They've been tricking us the whole time.
Predicated on just the business, if you would.
Wow.
And guys, you would assume that there's a healthy amount of business credit cards that are available. Make no mistake about it. The reality, though, is that If those activities are not reporting to a credit bureau profile for your business, they're not really doing you any value. And what that means is this: those very same dollars that you may spend, say if you're a rehabber, you're out spending $30,000, $40,000, a visit at Home Depot, Lowe's, but that's based on your personal credit, so it's reporting to your personal. You want those transactions, especially of those size, to be reported under your business credit profile, because essentially what it does is it shows how much money you spend. It shows the amount of accounts that you use. It shows your on-time payments. And those balances speaks to the strength of your business, right? I want anyone and everyone that's considering me for a line of credit to see how well I perform with my business. I spend X amount of dollars in supply costs. I have these material costs. There's so many things that that are encompassed in spending with a business that never make it to a report, that really minimizes your chances of getting strong, necessary credit when you need it, but more importantly, high limit credit, if you would, okay? So there's two ways that you can go about obtaining financing, right? So we've talked about it quite heavily here, using your personal credit. So in essence, I'm going to use the habits that I've performed well with over X amount of years in maintaining my balances and on-time payments to stand behind my business to allow it to access capital, right? Well, in that, once I sign on that dotted line to vouch for my business, I am also responsible for that debt and those monthly payments. The other side is that if you have revenue in your business and if it's strong enough, then that's another way that you can tap into resources completely free of personal information to allow your business to underwrite those credit lines for you. But in most cases, with today's economy, that typically equates to about $10,000 to $15,000 a month, which generally will yield, say, a $30,000, $40,000 line of credit. And in some cases, that may be great for some of your startup companies, but if I'm looking for real capital to really drive revenue in my business, then I'm going to need a lot higher of a limit, if you would, right? So the trick to it is to allow your business to show the risk factors based on your industry, how long you've been in business, the type of accounts that you use, the companies that give you a trade line as a reference to show how well you perform with business credit are a surefire way to access capital on a higher frequency, but more importantly, get the best rates, okay? Any questions on that before I go into how we do it and try to, bridge the gap, if you would?
Well, Marshall, I guess this would be a good time to get one, there's a couple questions that came out, but let me ask this one here. This is from Jean. She said, one of my business accounts is 0 to 30 days late, and it is the highest limit, 5,000, but I have 16 business accounts with lower limits than that are reporting on my business credit report. I started building credit last year, so I'm new to this. How would I go about fixing the Dun & Bradstreet's D&B score, the Experian, IntelliScore, and Equifax score under those circumstances? Is there any little workarounds on something like that?
Definitely. So, typically in the credit realm, any type of delinquency are frowned upon, right? It's one of those things that, it's not expected. However, there's definitely ways to navigate that, right? One, Dun & Bradstreet does have public resources that you can utilize to dispute those activities, right? And generally speaking, when we have clients that have such an impact, that's the first course. Let's dispute it, regardless of what the intimate details are. We're going to dispute it to see if we can get it removed. But more importantly, try to investigate why it was reported to begin with. And then in that, in most cases, this is one of those bonus pieces. Believe it or not, you can go to a lender and let them know, hey, this was a minor oversight. I have multiple businesses. Can you give me a one-time forgiveness for this event? And then see if they'll do it. And in most cases, I've had great success with it. And from there, we simply will go back, dispute the information with Dun & Bradstreet to get it removed, and your scores will rebound automatically just based on how credit is reported for a business. When you talk about Experian, the other piece of it, it's really going to come down to the type of accounts that you use. And that's one of the things that makes business credit so unique, because despite, it still being credit, a lot of those credit opportunities just do not report to credit profiles. So the trick to it is knowing who to use and how to use them so that you can effectively drive a business credit report. And believe it or not, if you do it the right way, 90 days, believe it or not, 90 days, you can find yourself back in good graces with credit, probably stronger access, more accounts, and really start to drive it. But again, it's really going to come down to who am I using and where do they report their activities? Hopefully that helps.
That does. And I'm going to wrap the next two questions from Michael and Mark into one. Michael is asking, is it a good idea to use personal information to help secure an account with a company? Because, his business doesn't have any credit yet, and he's only been in business a year. And a lot of people, are told that it takes 2 years in business before you can even venture down this path. And then I'm going to wrap Mark's in. He said, what are the pros and cons of obtaining business lines of credit versus a business loan? And do you prefer one or the other?
Nice. So, in essence, when you talk about it from that perspective, one, when you're going after financing, right, it's really going to be catering to what is your business model? Can you afford whatever monies that you need access to? Meaning, one, if I'm looking at business credit cards, what is the intent of using those? I'm a big fan of business credit cards, but a lot of individuals misunderstand how to utilize them, right? Business credit cards are simply credit cards. You use them the same way you do in your personal life. When those unexpected, expenses come about, when I have, this need, 15,000 that I know I'm going to have a short turnaround on, so I can replenish those balances and still bring credit back to good spaces. In those affairs, business credit cards are great, but keeping in mind that most of them will come with double-digit percentages, right? So if I'm tapping into this resource, how much does it actually cost me once the finance charges are applied, any advance fees or any balance transfer fees? How much does this money actually cost me? The math is simple, but you need to do it to make sure that you're not cutting into your profit just to use this resource. The other side would be business loans. Business loans are awesome. They are limited, especially when you are in certain industries, but they're great. And most of them, especially in our current climate, most of them are either SBA backed, and they have the best rates that you can imagine. We're talking single digit. Most of them start at about 6.2 or 6.2, 6.3. Great terms. And more importantly, you can access more, right? I had a client, just as an example, last week, put in front of a business credit card that he was adamant about. He was able to get 15,000. We waited, went back, went for a business loan, got approved for $60,000. Now, mind you, same credit profile, same details that they were measuring, but the difference between the two, huge, right? 15,000 is great for those incidentals, but having more so I can go out, strike up deals, have skin in the game, that is priceless for a business owner, especially a new one. And then to circle back on the business credit piece, most individuals assume that because I'm a business and it takes, like you've explained, 2 to 3 years for me to really be in the space where I can go the traditional means to secure financing. Well, guess what? What most miss out on is personal credit, you start as soon as you can. Business credit, most individuals take their time to get into it. The minute you have an LLC, you start building credit immediately. This is why. What you're doing is you continue to build the foundational pieces of your business so that you can have everything structured the way you need, so that when I take this first step into business, I don't have to go back to do any rework. The foundation is strong. Now I only have to focus on building my business and generating income. So that's why you want to build a credit profile right then and there, because what it essentially does is, by a creditor standpoint, I'm looking at a credit profile that shows that this business is operational. It's met the min requirements of all the business credit bureaus. And then more importantly, I see accounts, I see on-time payments, I see all of this activity, which indicates one thing: your business is operational. So what it's really doing is it's showing that you are a strong candidate right out the gates. And as you continue to mature your business, you mature your business credit profiles. So by the time that you hit that first year in business, you're one out of that high risk category. But more importantly, now I have credit references, and most of them are going to speak to your performance as a business. And that's where lending happens. So hopefully that answers that question.
Yeah, that was definitely a good answer. And I'm just gonna this one question, and then we'll get through the rest. This is a great one. And Jordan, I'll get back to yours in just a moment. Lisa is a private lender, and she was saying, I have a business that I use to lend money. Should I borrow from money from that business to lend money? That's an interesting one. So she's got a business, she's lending existing capital, but she's wondering, should I borrow money and then lend borrowed money out on real estate, private loans and things of that nature? If not, should I just apply for credit and not use it unless for an emergency?
Great
Very
question.
good one.
So that's a tricky one, right? When you talk about, investors as a whole, part or private, if you would, there's a lot of, lenders or industries that relates to high risk, right? And unfortunately, that's one of the top ones. So in that, if you are looking to pad your account so that you can lend more, I would say building a credit profile would probably be a big plus to you, right? And the effect that, one, Dun & Bradstreet is a very prominent part of business credit, make no mistake about it. But when you talk about actually gaining access to a line of credit, a loan, any of those pieces, business experience is probably the most heavily weighted piece in all of that. And Dun & Bradstreet is helpful in the effect that they will allow you to accumulate a score without having to do, statements on taxes, balance sheets, financials, all of those pieces. Dun & Bradstreet will allow you simply based on the fact that you are a compliant business to secure a score. And once you have that score, just like a personal credit, if I have a 700, I'm going shopping, right? Same rules apply. So once you have that score, now you can actually entertain revolving accounts. Again, no personal information in this, and start building a profile with business experience, right? So in this equation, if she were to do the same steps, what she'll do is she basically increases her lendability by showing that, one, not only am I taking the appropriate measures, but now I have business experience that indicates that I'm a good risk, and it speaks to business lending components, meaning, am I going to be in business the first 12 months or better? Am I strong and independent in my markets based on my industry that I operate? And then more importantly, is there a chance that I'll have a delinquency? And if so, what is that cadence? And then all of that, it promotes one thing, stability, and it shows the viability of your business, which is all communicated on a report. So in that, I would say go for it. But, again, making sure that you understand that building the experience profile in that equation, because you're going to need high limits, I would assume, that's where you're going to get more bang for your buck. But it's definitely a big plus to your business model. I love what I do. And this is because I started out like yourself, ground zero, completely ignorant to how it all worked, motivated, driven, determined. And after 3 failed businesses, and I'm okay with saying that publicly, 3 failed businesses, I finally said there has to be another way. And when I found out about business credit, I completely committed to it. And that was over 15 years ago, folks. And ever since, my passion has not died because I know what it can do for a business owner. It's really just understanding the intimate details. So I'm glad to have you guys today, and I'm glad that you guys have some great questions. Business credit, personal credit, although they're similar in a lot of their practices, there's a huge divider between the two. One, completely not regulated the same way, not required to report. Companies that choose to report do so by virtue of adding value to their model, right? And it comes with a cost. That's why many don't do it. Believe it or not, I last checked, I think it was 6%. It was the final number of excess of 600,000, my apologies, 600,000 business-to-business lending accounts. Only 6% of that actually reports. And that's where the challenge in business credit comes in. You can go online right now, learn the process. It's very simple. Buy something, pay it on time, make sure that it reports. But it's about who to use and why you use them and how to use them on a frequency to make sure that you're driving a healthy report. So to do so, first and foremost, you have to qualify. You have to make sure that you meet the min requirements that they expect. That is a physical address. You have to have your EIN. You have to have a business bank account. You also have to have a business phone line, dedicated business phone line in the business's name. And then from there, any licenses that may be required for your field of operation. Once we have that, our team walks you through the process of registering your information to make sure that it's accurate and complete. From there, once we have a profile created, we then go right into adding accounts. And with that, our first goal is to get an A credit rating with Dun & Bradstreet, which essentially can take 45 days for those that are good and able to go and perform the way we need them to. And then in some instances, it may take a little bit longer, 60 days, maybe 90 days. But for the most, the average is about 45 days. As soon as we have that A rating, we go right into the next level, which is how we start accessing revolving accounts to start building that Experian profile. And in that, now we are able to access gas cards, some of your big box vendors, solely on just having an A rating and being able to entertain those accounts without personal information. And from there, you have reporting, which we take care of. We have full access to the system, so that helps us navigate when those activities are reporting, how to plan and plot to make sure that the report is moving at a consistent pace, but more importantly, making sure that the indicators that are the most important in lending look healthy. So before we send you off to go shopping for funds, you are ready for prom. You have all the bells and whistles, and now you can attract more lenders just by virtue of having these additional credit pieces that speaks to your business's credit performance. And we do so with tiers of vendors based on what their credit requirements are. So as soon as your report indicates that you can move to the next set and gain some healthier accounts, we automatically transition you in that. And each process, each step of our process, you have coaching. And I think, in my personal opinion, that is the most critical piece. It goes back to education and surviving. By virtue of having someone that you can have, answer those questions. Hey, I got this letter in the mail today, and it says that I'm pre-approved for $300K. Should I go for it? Well, let me help you understand how that works, so you really have a firm understanding if you're qualified. But more importantly, make sure that it's a good fit for your business. A good fit, and then more importantly, how to maximize it so you can get as much as necessarily possible. So our process takes you from ground zero all the way through the advanced stages to make sure that you are healthy, attractive to lending, and then even more importantly, get this. This is something new that I've added. We do credit analysis on personal credit profiles. This allows me to go in, look at your credit, good or bad, to say, all right, here's your plan. You have great credit. This is how you can increase it. This is how you can maximize capacity. And then more importantly, maybe shift some balances, make yourself that much more attractive, manipulate that debt to income ratio, if you would. So again, it gives you more access, because at the end of the day, the name of the game is more access, more capital in any direction, okay? So as far as our process, like I said, we walk you through top to bottom. We do an analysis piece. We coach throughout the process. We have, access to reporting to make sure that we're driving in the right direction. But more importantly, giving you a sounding board so that when you do entertain anything related to credit, now I have a trusted resource that I can connect with so that I'm not making a misstep. Because in credit, once it's in play, there's only a few ways to get it fixed. And if it's not able to be, fixed or repaired, now you got to deal with it and deal with the consequences that comes with impacting your business. All right, so that being said, let's get to those questions so we can see if we help with this piece at all.
Marshall, selfishly, I'm going to throw a question in there. You mentioned here building the Paydex score, and this is something I didn't know. It says you say pay invoices immediately. So I'm just going to pick on Quill, right? Because we know Quill's a good one to build commercial credit, and we still use them. But when we get the invoices, is it best to pay them off immediately before the 30-day term ends? Because I know personally, in my credit cards, I now pay all my credit cards off every month. We use them for all business operations, but every month we pay them down to zero so we don't give the credit card any money. They hate that, and my credit score is suffering severely on my personal side. So my credit score went from almost an 800 down to under a 700 because I pretty much am not using credit the way they want me to. But here you're telling me pay the invoices off immediately, which defies what the personal credit people tell you. They want you to, not pay it off entirely. They want you to, not be super fast to paying them off. Like, can you kind of explain that a little bit?
No, definitely. So one of the pieces in that, and good point, that's one of the age-old myths of credit, right? Do I pay my balances in full? Do I pay them right away? Essentially credit card companies, they do want you to use those balances. Make no mistake about it. That's how they generate income. Now, of course, the risk factors, they want to see 30% or less, if you would. They consider that healthy usage, if you would. But in any effect, they want to, make their penny off the dollars that you spend. So in that, it's different for personal credit than it is business credit. In most cases, when you talk about business credit, it's really going to be predicated on the type of account, right? We start out initially, and most, when I say we, startup businesses, new to business credit, You start out with net terms, right? These are safer accounts, if you would, but they allow you to generate enough reporting to speak to those factors that are necessary to obtain revolving credit lines. And in most cases, they're net 30 accounts, but they're also net 10s, there's net 20s, net 15s. And depending on those accounts, in most cases, from our perspective, we'll give you a timeline as to when to make those payments to maximize the reporting element. But in some instances, it's really going to come down to the company and how they report their transactions. And if they're simply reporting transactions based on a purchase, say every third Monday of the month, they'll report those activities. However, there are some, say Quill, for an example. Quill actually tell you that you have to make 5 purchases with them before they'll report anything, right? Well, we learned the loophole with Quill years ago, so we simply put them further down in our process. We get enough green weights of other reporting companies to give us trade lines. So now we go to Quill, we make 1 purchase and we get a trade line. And that trade line is critical to a business profile because that is a credit account, if you would. That trade line is going to be your reference. It's going to be your business account that they'll need access to the information to validate how well you perform with other companies. And in that trade line is good for 24 months. And the cool part is that once a company has secured a trade for you, you don't have to continue spending with them, right? You only spend with them when you need to. And the trick to it is to use these accounts to manage funds in your day-to-day business, right? I don't want to have to come out of pocket to cover my daily expenses. I want my business to have to do that. And this is where those accounts will come in, like your gas cards, your Home Depot, your supply chains. I'm going to buy now and pay later. So now I have time to generate income. And then I'll cycle back, I'll pay off my balances, watch my scores regenerate, and then I go back at it. And every cycle that I do that, I'm putting myself closer and closer to higher limit lending. So hopefully that answered that question.
Yeah, that was a great answer. And let's jump to the next question. Jordan said, does an LLC protect when it comes to credit? So I assume Jordan's thinking business credit. So is there any relevance? Like, how does the LLC protect you if you're borrowing in the business name and then all of a sudden, well, you don't pay it off? I mean, do you personally get slapped on the hand for that? I think I asked the question the right way.
No, you asked it perfectly. I don't even know how to answer that question. So this is why. This is the formula or the secret that no one talks about. The whole reason that you want to separate yourself from the business is because, like, again, if the business unfortunately closes for whatever those reasons, you still are responsible for the debt, no matter what that number is, no matter what your current economic setting, right? A lot of people found that out during the pandemic. However, when you separate yourself, when you have a credit profile, it's the same as your FICO score, your social security number. It's reported to that information. It stays with the business. It's not reporting to you because you did not use your personal information. It is a business affair. That's the cleanest way that I can answer that question. Hopefully that answers it.
I'm going to refer back to Dumb and Dumber with that one. So you're saying there's a chance. All right. So Garland's got a question here. If you already have a D&B credit score, how do you check your Experian and Equifax scores?
Okay, so we have a resource that we've had access to probably about 8 years. It's a company called NAV, NAV.com. And we set clients up with it only because they have a multiple of resources. It's just like Credit Karma. They'll make tons of recommendations based on their affiliate base, right? Which are not bad options, make no mistake about it. However, you have to know what program to use that's really going to benefit having that access. And what makes them so unique, NAV is the only of its kind. It's essentially the same as Credit Karma, if you would. It gives you access to your personal scores, but it also gives you access to business Experian reporting. It also gives you access to Equifax reporting. And get this, if you have multiple business ventures, you can even report information up to 5 different businesses. And if I told you the cost, you would think I was making it up. But it is the most reliable reporting service that we found in years. And it's so super critical to success because it's the one platform that is not as costly as Business Experian, Dun & Bradstreet, or Equifax, that will give you everything you need to know about your business credit profile to be able to really drive it. And, when you talk about this type of access, Dun & Bradstreet typically will charge you $100 to $120 for one report. Then if you look at having access for an extended timeline, say for a year, believe it or not, they start out at $3,200 and some change, and they work their way all the way down to a $400 price point per year. Nav, get this, is $39.99 a month. You can cancel whenever you like, and you have full access to everything on one platform. So it is a diamond in the rough, folks, and we use it religiously. We use it to check Experian to make sure that things are healthy on that side, to show what that grade score is, how to drive the Experian report on the Equifax report on the other side. So it's a great resource, but that for right now would probably be the best option.
Well, that's way better.
That's why I have links. I can send them over to you and simplify it so you'll know exactly where to go and what to use.
That's great. When we did our business credit back in 2014, when we ventured down that, they had us sign up for Experian. Now, I knew no different, but Experian was way more expensive than that. And also, they just constantly are trying to upsell you into the next thing and the next thing. And when you're new to this, you think you need all that stuff. So me and my wife, I can't remember. I'm embarrassed to even say, but for many, many years, we paid Experian way too much money, and we could have just had Nav. Well, maybe they weren't around then. But Chris has a really awesome question, and I kind of laughed when I read this, Chris, so don't fault me for that. But how does business credit tie into real estate investing? My answer would be, how the hell does it not tie in? But I'll let Marshall, the expert, tackle that one.
No, great question. And that's a huge population of our client base, if you would. The way you go about doing it, especially in that market, you're in high limit arena all day, every day, right? And in that market, you have to have access to multiple resources. Generally you have personal credit, which is good for about 6 months or so because the impacts are immediate. Then you have savings, personal savings, retirement accounts, hard money, private money, and then business credit is another one. And business credit in that particular arena, the trick to it is first and foremost, build a profile strong enough so that you can access resources like Home Depot, your wood companies, your tile companies, to buy now, pay later, right? So that's going to help me in those projects while I'm getting those high expenses, if you would. Then the other side is as I'm doing that, the very same accounts that I'm utilizing to manage business, well, they're reporting those balances and they're speaking to those behaviors that lenders look for. It doesn't matter what the market. So when they see that you have a healthy Dun & Bradstreet report, you have a healthy Business Experian report, a healthy Equifax report, those all are considered in what they call a liquid score. This is one that's been behind the scenes for years, but it's a really big part of lending that most don't know of. And it encompasses any and everything that you touch as credit, be it just as a person or as a business owner. And what it does is it factors all of your credit management together for one score that traditionally most of your institutions will use. And it really shows one thing, that you have good credit management. And then if you have high limit in that, even better, right? So when you talk about that, say real estate or rehabbers, if you would, generally speaking, you guys don't have a high frequency of going the traditional means to secure financing. Most of it's hard money and private money, if you would. But a lot of big business banks are starting to open up their online communities to promote healthier business credit loans. Believe it or not, I have access to a U.S. bank line of credit up to $40,000 with no income, all unprojected revenue. And to add insult to injury, I even have the VP of business banking that does all of the management for us to make sure that it goes as expected. But there's tons of different options that are now becoming available as more locations are starting to go away and transfer into an online vehicle, and really starting to pay more attention to the data analytics that Moody's, Dun & Bradstreet, Business Experian are promoting with regards to healthy credit. And the changes in credit that have happened over the last 18 months are huge. They're monumental. And that's because lenders, creditors, everyone congregated to say, guess what, guys? Your practices aren't working. We still have bad credit individuals seeping through the cracks and causing damages. So FICO scoring system 10 rolled out late last year. It changed a lot of individual scores. They may not have realized it, but it did, 10, 15 points here and there. But it's a much more stringent credit monitor, rating, if you would. and more lenders are converting to that model because a lot of them are still using some of the dated FICO scoring systems, but some of the large limit, your traditional means, oh, they know what the new system is and they're using it effectively. So in that market, you simply allow yourself access to these type of lines of credit that you can build and expand on and continually grow over and over and over and over. And then more importantly, attract more and more just based on what you have access to already. So hopefully that helps.
Absolutely. And then George, and we've got this question before when it comes to business credit. You said, are virtual addresses bad? And can you use a virtual address to establish business credit? I mean, it's kind of a virtual world these days.
Indeed. And that has been one of those challenges historically for business credit, simply because business credit, the primary reporting element in it for business is the address, right? So when you talk about organizations like Dun & Bradstreet that are global, Business Experian, you can only imagine the duplications of addresses, especially when you use those type of vehicles. However, virtual offices are probably the second most preferred outside of the brick and mortar, or a home address, right? Only reason being is because in most cases, lenders and creditors look at that as a physical location. As long as it's a virtual office, you can't use the mailbox store that says, I'm going to give you a street address versus a PO box, because when I go in Dun & Bradstreet system, interestingly enough, they're in affiliation with Google. So when I pull up the profile, I can see wherever that location is, even if it's a home address. Right? So those are little things that creditors look for because, again, I want to make sure that you are really a real business, not some Winnebago off the side of the road with a bunch of PO boxes securing credit and, probably doing bad with it. So a physical address used in a virtual office it's really common, if you would. Just make sure that it's not the mailbox, etc., or the mailbox store, if you would.
Love it. Mark has a kind of a long question, so I'm going to read this one. It says, I have one LLC that I run my business operations out of, but I purchase properties in separate LLCs. Should I have business credit for all LLCs or just the one that I run my daily operations out of? That's a good question. My concern is when I refinance the properties under the separate LLCs that I won't have business credit established. I'd like to refinance in under 1 year. Is that possible to build that credit in such a short period of time? Great question, Mark.
That is a great question. Well done. I like that one. All right. So yes, to the 1 year timeline. Typically, we get to an A credit rating in most cases, like I said, between 45 days or so, maybe 6 months to an A rating with Dun & Bradstreet and Business Experian. So definitely doable. And when you have a corporate structure as such, right? Say I have 3 entities, if you would. They all have separate functions, but they're all connected to some degree. Well, essentially, when you build business credit on one, you're creating a hub for all of your corporate structure. However, it's always best to double up and build credit on individual businesses, simply because if I build a bank for one business model and that business collapsed, what did I just do to the remainder of my model? I just cut out a big piece of their access, right? So by separating them, putting them in their own individual silos, not only do you double up on what you can actually secure, you increase your capacity, you create a higher sense of security between those entities. So I always encourage owners, depending on what it is, always separate it out. Do one per LLC, simply because you may not maintain all of your businesses, and the last thing you want to do is build a pillar that may not be there 10, 15 years later down the line. So hopefully that helps. And I know it was a long question, but in summation, I think that should address everything. But if not, let me know.
Perfect. Garland said, what bureaus are reporting using the new FICO 10?
You know what? All of them are actually, so this is, the bureaus, like I said previously, their job is to simply record the data that is being delivered from the creditor lenders or anyone that's reporting activities. So in that, the measure on the other side, who's using that scoring system in their assessment when they're looking to approve you for credit? Most of like I said, most of your larger conglomerates, your main players like your Amex and your main like Synchrony Bank, these guys, they're using data sets and they're using the newest models, right? Because they just have that kind of volume to do so. When you start looking at some of your lower level lending or some of those, privately funded groups, things to that effect, That's where you're going to see the difference in the scoring models that they use, because these scoring models, they already have access to them. They come with a cost. And of course, the new stuff costs more. So generally speaking, most of them may be still using the dated scoring system. But at last check, I'd like to say that the bulk of them are still using 8, scoring system 8, which is, it's not very far off from 10. There's some distinct differences between the two, but the bulk are really still utilizing FICO scoring system 8.
All right. And then Shannon has a series of 3 questions, which I think we can jointly answer, but he's asking, what is the best business bank to go to for marketing and real estate? For example, like paying for direct mail, wholesale companies typically spend an awful lot of money every month on marketing to get these lucrative off-market deals. So where would he go? Is there a real easy way to provide like a working line of credit you could use for marketing?
Man, you guys came prepared. I am impressed. Great question, first and foremost. Ultimately, the bank, it doesn't play as significant of a role in that equation. This is why. Anytime that I'm referring a bank in any direction, most of the common fight has been, do I go large national? Do I go small and local? Do I go credit union? Truth be told, it's going to come down to a few things, if you would. One, where do you currently bank? And what is that relationship? Is it tenured? Has it been fruitful for you? If so, first option, right? But in that, the bigger drivers when selecting the business bank account, no matter what the arena, first and foremost, know who they lend to, right? And then more importantly, what is the lending platform? Is it easy to access? Is it stringent? What do I need to know? Because if I choose you as a business bank, ultimately, I want to use you as a resource, right? So that's a very important piece. The other part being, well, fees, right? I'm a business. And I can't make money if I'm throwing money out in every direction. So I'm going to be very frugal in my spending, and I'm going to watch all of my costs. And I'm going to start with just simply looking at the bank annual fees, wire fees. What are your costs? Because that's going to be important to me, especially knowing the amount of transactions that I may have or the amount of monies that are being moved through these accounts. What are those limitations? All of those factors are really what's going to drive how you select your bank. Now, in the real estate market, one of the things that's most prominent that will generally be a decline for an account, most of them know that that's a high-risk market, right? And a lot of them are not favorable to that particular industry. So in essence, some of them will disqualify you if you work with brokers or if you're an investor. So I would say, first and foremost, find out who they operate with. What are their restrictions? Who do you not work with? Then let's look at that lending platform. Can I use this? Will this be an advantage for me? And then more importantly, how much is this going to cost me on an annual basis based on my business model and the frequency or cadence that I'm going to have, transactions run through these accounts? So that's the driver. So when I'm sitting down with that banker, those are the questions that I want to present.
Awesome. All right. And then that kind of hit the second question, Shannon. So I think you were saying if you go to the bank and you say you're a rehabber or a wholesaler and you need business credit funding, I think, just find a bank that works within those limits of your business. I mean, don't tell a bank, hey, I'm in merchant services when you're actually in real estate. I mean, just find a bank that works with you. It took me a while. I found a community bank in my town that loved to work with real estate investors. And I've been working with them ever since. I've utilized probably tens of millions of dollars from this bank, and 100% in a commercial capacity. And I think you just got to find yourself one of them. And when you go into the bank and you said, what should a person in real estate tell the banker to secure business credit? That's an easy one, the truth. So tell them the truth.
You know what's funny? On the tip of my tongue, I was getting ready to give that little cookie, if you would say. This is the loophole. So when we talk about business credit, it's just like any other type of credit. It's all based on what the rules are and what you can do to manipulate it. Let's be realistic about it, right? How do I get as much as I can without the damages and do it the right way legally, right? So when we talk about real estate investors, because of the fact that the term investor is so high risk in credit, that we don't recommend using that. It doesn't matter if you're a wholesaler, rehabber, doesn't matter. Investor, yes, but the word or verbiage that I want to use is single family home remodeling.
Ooh.
This is acceptable to banks, the bureaus. They use that because in essence, it really kind of caters to what you guys are doing. You're going in, you're finding a project, you're doing some remodeling, and then you sell it. That's it. That's, technically from a credit standpoint, they look at that as investing, if you would. But essentially, you say investor in the wrong arenas, it'll get a few doors closed on you simply because of the fact that it's probably one of the top areas of high risk, if you will, when it comes to credit.
All right. So we got an anonymous question that's come in from several people asking, how much do you bench? All
I don't
right.
want to answer that question.
Yeah, next question. Mark, is there a process or system? I just had to throw something in there to get everybody to wake up, because at this point in these trainings, everybody's kind of like dozing off. That should woke your asses up. So here we go. Mark is asking, is there a process or system that you can use to set up a business phone? I don't have a physical address to run my business, and I don't want to use my home number.
Ooh, tall order. We got this. So primarily when it comes to the business phone line, this is probably the biggest disconnect for a lot of individuals that are building credit, simply because of the fact that, one, it's an additional expense, right? Again, we're staying low cost, we're flying below the radar. So any additional expense is going to cause some irritation. So in that, we've identified the easiest, cheapest vehicles to use to make sure that you get what's qualified, more importantly, right? And in that, you can use voice over internet protocol companies. These are companies that you probably already have services established with. Your phone bundle with your cable company, simply put, it's a line that's established through your internet provider that will typically be routed to your cell phone via app, right? So now I have a hard landline, and I actually have one myself for my business. It works like a charm. And I forward my calls to my cell phone, but I can also download the app, and then it automatically translates those calls. And most of them, if you would, the price point starts out, there's some that are as low as $10 a month. But again, the biggest piece is making sure that they're qualified. Say it's an example, Google Voice, not a good business phone line. Reason being is because it's technically called forwarding. It's not a tax. It's not an account that a lender can validate. Hey, do you have a business listed at this address under this name? Do they have an account with you? No. That's what it really comes down to. When I'm a lender or I'm a creditor, I want to be able to research any details on your application, validate them, so I can continue to move forward with the approval process. So voice over internet protocol companies are good to use, especially in this scenario, because I can use that. And believe it or not, Google Voice has, not Google Voice, but Google Services. Not Google Voice, Google Services, which is a fairly new process or a new feature that they have. And it comes with a monthly cost. It's a $10 plan, a $20 plan, and a $40 plan. And as you would imagine, each tier comes with X amount of access, but they do list it with the national directories, not just your cell phone provider or your local directories, the national directory, so everybody can have exposure to that information. And they also have all of the other requirements embedded in their service. So these are companies that we recommend to our client base on a regular basis, and they perform well as a result. But in that scenario, I'm going to say voice over internet protocol probably would be your best option, or maybe that Google Services option.
Jordan had a question. I've never heard this one asked, but I guess it's kind of piqued my interest. Does your criminal background affect you getting credit for your business?
The only time that would come into play is if it was something that was tied monetarily to the business that would show up on the business credit report. Any judicial proceedings, any judgments that are based on the business, those, believe it or not, also make their way to the report. And they're typically a UCC filing. But generally speaking, that would probably be the only arena that I would even see that it would surface, if you would. Generally speaking, it's all based on the business's information if you do it properly. And in that arena, it's simply business information that they receive, nothing more.
Great. And then somebody said, I have a registered agent for my company. So they might have an LLC up by you guys in Las Vegas. So they have a registered agent. How do I register on Dun & Bradstreet with a registered agent's information for the company name?
Unfortunately, you can't. So because business credit is predicated on solely the business, they won't allow certain components. That's why that compliance piece comes into play. So, typically when they want an address, they want a physical address that's validated by the Secretary of State, if you would. So when Dun & Bradstreet approves a credit profile for any business, no matter what the model, they will go physically through each of the compliance items completely. They will even go as far as picking up the phone and contacting the business number to hear it being answered in the business's name to make sure that, yes, this is a legitimate business. But more importantly, that first stop is to the Secretary of State to make sure that you're an active charter in good standing and that the address reflects the correct information, because Dun and Bradstreet is going to tell creditors that, yes, this is a physical location. This is where this business is physically located. Any discrepancies in that will have significant impacts on reporting, and it generally will stall the process, if you would. So hopefully that helps. So I would recommend, when you talk about replacing a registered agent as the physical location of virtual office, but again, that comes with the cost. The most common used course would be the home address, believe it or not, because this is for the official part. This information isn't going on my marketing materials. It's not going to be in my business cards. This is, I've applied to 3 lines of credit and I'm waiting on those guys to give me a call. And this is the business number that they're going to do so, right? So in that, it's ways that you can navigate what's on public view depending on what your state will relinquish on their websites. But generally speaking, most will use the home address, if you would. And if you have an LLC, this is what I've always said. Clients don't, customers don't show up on your doorstep. It's always the thought, but the LLC is there to protect you. It is the insurance. So believe in the insurance that you purchase because it's there to perform a function. When it comes to credit, this is going in the hands of creditors, lenders, credit bureaus that are validating checkpoints to make sure that, yes, you're a good risk. Yes, your information is accurate. And then more importantly, it can be validated from one side to the next. So hopefully that helps.
And Shannon was just asking, what is the best business credit card or business line of credit for real estate investing, if he's a startup real estate company?
Again, it's going to come down to what you have access to. Again, you have a lot of business credit cards that are offered that doesn't report. So Amex has a few that will report. Chase has a few that will report, but they also report to your personal. That's it for the most part. Bank of America offers a ton of different business credit cards, but they don't report. So keeping in mind that if I'm securing credit cards that are best, it's based on them being a reporting company, if anything, right? When it comes down to the particulars of the industry, generally that's going to come about in the underwriting process, and really it's going to come about based on how much money and consistency of the revenue that you are generating so that they can measure the affordability, more importantly, and the frequency that you'll be able to maintain balances. So, specifically for that industry, honestly, it really just comes down to the same pieces. They're looking at what's been measured, the data that they can collect, if you would. Then the industry comes into play when it comes to, okay, what are the risk factors? Is this a saturated market where there's tons of individuals looking for financing? Because that means that I have a higher propensity for someone to default on a loan. So I'm going to take that into accord when I come up with a balance. So if I have an option to say I can lend to you, say 50 to 75K, more times than none, most will go with the safer route. We'll start you out with 50K. It's a safe amount, see how you perform, then allow you to circle back for increases later. So hopefully that helps.
It's funny. I talk about this a lot. One of the things that I learn a lot from reading is, I read a lot about people that are in their final stage of life, seniors that maybe only have a month to live, they're in their final year. And when they go around and they ask these people, what are the things that you really would have changed if you could go back and talk to your younger self? And it's always starting things earlier, doing things that, make experiences, make memories. And also the biggest thing is regret. They regret not doing things sooner. So not that this is pertaining to that, but really just take action. Too many people spend a lot of time gathering knowledge, learning, these are free trainings. They come on, they get knowledge, but knowledge is not power. The person that said knowledge is power, I think they missed an important step. It's the application of the knowledge. So you got to take action on this, and taking action is right there, starting a call. Set up a call with them, ask your questions, and see, can this get me to the level where I want to be? Marshall, what is the process and how you work with people? We put your information up there a couple times. We have a dedicated call-in number. We have the calendar right there if someone wants to set it up. I mean, what are some of the things that really can help people get to the end desired result?
So the easiest way to position it is this. I've explained, my troubles and woes with business and trying to do it the way that I thought it should be done all those years. And through trial and tribulation and tons of education, if you would, going behind the wall, talking with the owner of NAV, talking with these key pieces in credit to really gauge how it works, to learn the secrets. And ultimately, the easiest way to position it, if you're from my gamers out there, if you have a video game, you can probably find the cheat code, the cheat book to show you the easy way to go through it with ease. And that's a fun time, right? For some. However, there's no such thing for business credit. There's no such thing for credit. Essentially, that's what we bring to the table. We give you the cheat codes. We show you how to do it. We help you understand how it works, not just to say that you've accomplished a one-sided piece with securing an A credit rating, but let you walk away from that experience knowing how it works. So again, you can massage it into your business plans, maximize the opportunities that are there. And when I tell you folks, there's a lot of money out there for businesses. There's a lot of money. Investors want to invest because that brings them money, right? But if I'm going to invest, I want to know all of the risk factors. I want to know about the crazy uncle that may steal a credit card every now and then. I want to know about this huge expense that you keep hidden. I need to know the intimate details so it gives me a fair assessment on what your management skills are, so I can feel free to say, hey, you're a good risk. How much do you need, right? So our process walks you from start to finish. One being get you registered. Two, make sure that you meet all those requirements the correct way in a timeline, more importantly. Then we move to adding accounts, who to use, how to use them, what are those payment habits. From there, we go right into the next stage of how we access advanced vendor credit. This is where I'm starting to use these accounts to feed my business. And from there, we educate you on how personal credit works, how we can factor into it. And then the last piece, bringing it all full center, we do an analysis on all of our clients to see what we can actually tap into right out the gates. Or to say, hey, you know what? Good credit, here's a plan. We can beef things up a little bit. Because ultimately what we do is we build credit and we do it well. We do it very well. Right now, I think I'm carrying in excess of about 3,000 clients in our business credit process. And when I tell you my phones stay busy, they stay busy, not because anything other than it's a lot of information that a lot of people want access to. And what better a place to do it where the experts lie and have done it for years consistently.
Yeah, I think you've demonstrated an extreme knowledge in this, but not just knowledge. Again, it's like you've been in the trenches. You've obviously figured out the ins and the outs, the cheat codes. I love that analogy. I'm going to use that, man. The cheat codes. When I was a kid, man, I don't know what we had, Pac-Man, and we had Mario Kart and things like that. But, like the cheat code was what I always wanted, and I never had that darn cheat code. So, folks, this is your cheat code. Take advantage of it. Get a call scheduled. I don't know what you'd be waiting for. It doesn't cost anything to jump on a call. And then if it is something that will solve your problems, boom, take action and start doing it. Me and Larissa did it many, many years ago. And had we not, we wouldn't have been able to access tens of millions of dollars to do hundreds and hundreds of real estate deals over the last 6 years. So, I'm not saying I've done it right. I've made more mistakes than I should have because I didn't have cheat codes and experts like Marshall. But folks, get on it and get that done. Marshall, thank you so much for joining us for the Wealth Webinar.
Thank you so much. Love the energy. Love it. You guys, good luck out there. Have some success. I look forward to hearing from you guys. I really want to show you how we get it done. Make sure you reap the benefits as well. Good luck, guys. Thank you so much.
Thank you. And folks, one final thing before we let you all go. Under 10 seats, okay? Listen, we always talk about this. This event that we're doing, not only is it at my house, August 27th to the 29th, but this is an event that you're going to come to make memories, experiences, things that listen, I can tell you what they are, but it doesn't matter. You have to be there. If you're looking to take your business to the next level, if you want to surround yourself with a network of people that have net worths of hundreds of millions of dollars, that are professional coaches that are there just to serve you, to serve your goals, to find out what it is you need. And I had a coaching call the other day with one of our awesome coaching students, and they were asking me, well, when we come to experience, what should we ask? I said, ask one thing. Ask the one thing that's holding you back right now. What is that thing that's stopping you from being where you want to be? What's that one thing that's stopping your business from being where you want it to be? That's what you need to ask, because the experience isn't an event that you're going to come to learn a whole bunch of new stuff where a bunch of people are speaking from the front of the room. You are going to tell us what is holding you back in life and in business. And every one of the mentors are going to then focus the entire time on solving that problem. And in the mix of that, we're going to make some serious memories. We're going to do fun things. I mean, there's so many things planned, but one of the things planned that you can't not be told is a celebrity experience. How many of you have ever actually got a chance to be in a room to hear a celebrity tell their story to you in a very small group of people? There's only 25 people. This celebrity was in a movie, but not just in a movie. The movie was about his story. And I've heard this story. It is one of the most impactful, powerful stories ever. We rented a movie theater. Like, we didn't spare any expenses, folks. You're not going to just come sit, in my house and like, that's it. No. We rented a movie theater for you. And we're going to actually have an experience of a lifetime that night. The next day, you're going to have Brandon Steiner. We're flying him in. We haven't flown him in yet. We're flying him in. He is the guy that bought the Yankee Stadium. And he is a business, he's just so unbelievable when you actually see what he does. And we're going to spend the entire day with Brandon and Randy working on your business, but we're going to do it at a private lake. And we're going to do races across the lake in canoes and kayaks, and we're going to have paddle boards and surfboards and cliff jumping, whatever it is you want to do. If you had a private lake that was crystal clear that you never ever would be able to have access to, we're going to do it that day. And there's so much more of it, folks. There's under 10 seats left. If it's you and a partner, if it's you and a spouse, there's a discount for the second person. Stop waiting. Stop thinking, oh, well, I'm wondering, I don't know what's going to be happening in August. Like, literally, by the time you make up your mind, the whole place will be sold out, and there is no more seats than 25. I don't want more than 25 people in my house, to be quite honest. So take action, get your seat booked, stop making excuses that you're going to regret someday. And hopefully it's not one of those regrets that I talked about in your final hour saying, I regret not doing this. That'd be the worst thing you could ever do. So we will see some of you, at least 10 more of you, August 27th to the 29th. There's the link for the experience. Check it out. The whole agenda is there and everything we're doing. With that being said, Stephen, anything you want to say in final closing?
No, that was excellent today, though. Thank you, Marshall, for being here. That was great. And I look forward to seeing some of you guys at the experience next month, and another great Wealth Webinar Wednesday today.
That being said, folks, thanks for joining us for another Wealth Webinar. We'll see you next week. Same great place, same great time. Till then, we'll talk to you soon. All right, if you like that video, make sure you check out this video right now. And also, don't forget, subscribe to my channel, and don't ever forget to smash that alert button. We'll see you on the next one.